Hello and welcome your tune into CNBC TV18, and this is one of our interesting conversations. We have a very special guest with us. Peter Parry, Chairman, Global Energy and Natural Resources at Bain Company, is joining us now to talk about energy markets, the transition that globally energy companies are talking about, the investments and a lot more. Peter, it's a pleasure to have you with us on the show and on CNBC TV18. And you know, interestingly, we are talking about a time when last 2 to 3 years have been very volatile for energy markets, but we are also looking at a war. How do you look at energy markets from here on, both from the dependence that we have on fossil fuels at current levels and the transition that economies, governments and companies are undertaking?
Yeah, hello. It's a great pleasure to join you, and a privilege to engage in this discussion. As you say, it's a changing time. It seems always in the energy markets, where the pressures on producers and consumers alike are likely to vary from time to time. We've had some significant disruptions in the energy markets in recent times. We are currently in a period of relatively high commodity prices, and at a time when the world is putting more and more attention on energy transition as well. So that twin agenda of delivering energy at a reasonable price and at a secure supply source in a time of change and lower carbon is a big challenge.
Okay, so you know, when you talk about more companies talking about transition, that of course is a challenge as well because of the times that we are in. But do you think these companies in India or abroad talking about this transition have the right talent to do it? Is that something that'll prove costlier, higher technologies that we are talking about? What kind of costs will they have to incur?
Well, it's a combination of factors, of course. The availability and supply of the right talent in a very fast-growing industry situation is always going to be a pressure. If you see some of the clean energy technologies growing at 10, 15, 20% per annum, the supply of new people into those industries at that rate is very hard to sustain. So the war for talent, or the competition for talent, is intense. But the opportunities are there as well for entrepreneurs and careers to be developed through the cycle of the next 5 years. So yes, talent is a real key challenge. Working hard to bring new people into the industry, to bring the best and the brightest who can help us evolve the industry very quickly is going to be a key.
Okay, so talent continues to be the key focus. The other is investment in some technologies, or this new energy, so to say. Do you think those are high return generating assets, or do you think they will be, it could be questionable when it comes to returns on such assets or such investments?
Yes, and we're largely talking, and not entirely, but we're largely talking about technologies which are going through rapid change. In order to enable those technologies in renewable power generation, or in hydrogen, or in biofuels, etc., to deliver the kind of returns that investors want to see, we're going to have to see those technologies improving 3 to 4 percentage points a year, either in terms of the cost per unit of energy output, or in terms of the efficiency of those technologies in place. So we are against a backdrop of inflation. We're against a backdrop of rising interest rates, or high interest rates, and so the need for continuing to push technology evolution is fundamental to deliver the right kind of returns.
Okay, returns continue to be very important because there's been a lot of talks around ESG investing as well. But when you speak about technologies, Peter, what are some of the most important technologies that companies are focusing on, or you think will be needed for this transition that we are talking about?
Yeah, the focus of technology is potentially very, very broad. There are literally hundreds of technologies that can make a contribution. The real issue is which ones are going to make a contribution at an industrial scale. So if we concentrate on those for a moment, the first one out of the block really is around carbon capture and sequestration. This is the technology applied at the combustion end of the energy use to take the carbon out of the atmosphere at that point and sequester it. These are industrial scale projects. We see many energy players already now leaning into new investments to create new capacity or expand existing capacity in carbon capture. We see the evolution of things like direct air capture as well, an earlier stage evolution in that development, but this is for very intensive energy use activities in very localized areas. So DAC could be an important feature. From my part, I'm very interested and excited by the evolution and development of what we call green molecules, that is fuels, largely biofuel driven, and the degree to which biofuels can and make a significant impact for us. Again, here it's about scale and the degree to which you can have a profound impact in a market or in a situation that's going to be visible within a short space of time. And biofuels is one of those areas. If we go a little bit further out, a lot of discussion on hydrogen and how hydrogen can play into decarbonising industrial landscapes and industrial hubs, but I think a little bit longer time frame to develop an active hydrogen market. I think many players are struggling to find who the customers are for hydrogen in the next decade, but certainly that's one of the key technologies for the longer term.
Oh yes, and a lot of companies, not only abroad and in India, have been interested in green hydrogen, and they have actually put out a lot of infrastructure there as well. Peter, this takes me to the next question, and it's an important one, because while we're talking about energy transition and we'd want it to be secure, limitless, affordability comes into question. Do you think transition to newer ways of newer sources of energy would come at a higher price? People have been terming greenflation as a possibility. What is your take here?
Well, again, we go back to the technology evolution or the speed of evolution of those technologies. We've seen solar, for example, come down in the cost or the levelized cost of producing solar dramatically in the last decade, to the point where it's one of the lowest cost sources of energy, certainly in remote locations or in new demand situations. Installing solar can be a very important component there. So the cost of energy itself is dramatically important. We're in a high commodity price environment right now, so prices for oil and gas are relatively high against the last decade, and so the end consumer is already bearing relatively high costs for energy, and some of these new energy sources can be competitive quite quickly.
Okay, all right, Peter, it was such a pleasure speaking with you. Would have liked to chat a little bit more, but out of time. But great insights, and hope to be speaking to you soon again.